Okay, so now let's talk about the meat of stock market trading, which is strategy and tactics. Now, here's where it gets really crazy because there are a lot of things a lot of possible strategies. There is not one. And most strategies, well, strategies normally last long, but tactics, most of them actually stop working in the stock market. Basically, any particular tactic, any particular formula that works, once everybody finds out about it, it stops working. So, there are, like I said, there are many ways of doing it. I'm going to put these in a couple of buckets, 3 buckets, in fact, of strategies, and then I'm going to give you examples of each one of them, and then that gives you an idea of what other people out there, what other traders are doing out there, and then you can pick and choose depending on who you are, what you're doing, what you're good at. You can go and research. My thing was I basically went and studied every single one of these, and there are a bunch of books. There's one book that is, but in each one of them, I would give you basically a couple books that are considered the Bible of that particular strategy that have a whole list of these particular techniques in each category. And I'm going to go through a few of them just to give you an idea. Obviously, I can't cover all of them in one video, but it's very important for a well-versed trader. One of the things I tell people who want to trade stocks is that you should become really good at one thing, that's for sure. But you don't want to be to get so much tunnel vision that you also lose other opportunities that are out there. As a matter of fact, I can tell you, a lot of times you can enhance your trading technique or style by learning from other schools of thought and just applying them. That's probably the simplest way to do it. So with that, I can tell you that there are basically, this is what a strategy is. A strategy is, at a very high level, is knowing when to enter, meaning buy, and when to exit. As a matter of fact, I would make it even a little bit more complicated by saying knowing when to enter and how to enter. There is not, it's buying stocks is not just buying it. Sometimes people average in, sometimes people average out. So know when to enter and when to exit, how much to buy, and how to get in and how to get out. So with that, I'm going to break it down into 3 buckets, and I'm going to give a few examples of each one of them. There are a whole category of investors out there that are called, they call themselves, again, different terms, but fundamental traders or fundamental investors. These are people that actually looked at the business fundamentals of a particular company and make a decision based on things like, okay, what's the price to book ratio of the company? And they take a bunch of these metrics. Some of them are formulaic investors, meaning they have rules. They say, we look at 3 quarters of growing. So the rule is if a company has 3 consecutive quarters of earning growth, and the earning growth year over year is at least this much, and price to book ratio is at least this much, and blah, blah, blah. So a bunch of rules. And then those rules kind of boil down the universe of stocks to a handful of stocks. Sometimes they buy a portfolio of all of them. So it's like that is called systematic trading, meaning there's no human intuition. You just put the rule, and the rule is like a machine. It just goes through. And they have tested these rules against, they call it back testing, against historical data. And they've come to the conclusion that this is a good rule, and therefore they put it in motion, and it's now a systematic machine that involves no human. I mean, it involves humans in the sense that there are humans watching it, but they're not making decisions. So these are fundamental investors. They look at business fundamentals. Sometimes it's mixed. I mean, these things are never exactly black and white. There are many shades of gray here. Then there are technical traders. And I apologize for my handwriting. Technical traders. Technical traders are people that are looking at charts. And here's, in every single one of these, there are people that are purists. There are technical traders that they are so purists that they say the only thing that matters to me is the chart. I don't care what industry, what the company does, what they sell. I don't care. All I care about is what the chart looks like. And then they have indicators. I'll get into all of these. I'll give a few examples to add some colors. But basically, 1, we have fundamental investors. 2, technical traders. So these are people that look at charts. Now, there are people that look at charts and look at fundamentals. So you see how they mix it up. But then the third one are, I call them, this is maybe there's a better term out there for this, but this is the term I use, story-driven traders. Story-driven traders, again, sorry for my handwriting. Story-driven traders are people that do something like this. They say, I think the future of cars are electric cars. And Tesla is by far the best electric car company out there. Therefore, I'm going to buy Tesla. You see, it's a story. You have a narrative of what would happen in the world, and you believe in that narrative, or you're willing to bet on a particular narrative. Nobody can guarantee. Tesla can totally go bankrupt tomorrow. But that's a narrative that you're willing to bet on. So that's a story-driven narrative. I tell you another one that actually a friend of mine traded for a long time and very successfully. The narrative was this. It's another story-driven trade. He said, I buy stocks when the company comes public and the founder is a CEO. And then I sell it the moment they put a new CEO in place that is not a founder, or the founder dies. Basically, his narrative or his story is that only founder-driven companies are worth investing in. Maybe true, maybe not. But that's a belief, that's a narrative. And that is what he was driving. It's not fundamentals. It has nothing to do with fundamentals. He probably, if a fundamental investor looked at, let's say, SpaceX or Tesla is a better example. If they looked at Tesla, they would have said, oh, this company is losing a lot of cash. So that would be, maybe fundamental investors are not going to buy that, but story-driven traders, or investors, I should say, they look at them like, the founder is there. He goes to work every day, and he believes in his company, and he will make it happen. So that's an example of a story-driven trade. Technical trade, fundamental investor. I'm going to come back to this chart, but I want to go to a new page and talk about, these two are easy to understand because most people understand fundamental of trading. If you do not know financials, if you do not know how to read financials, I don't care if you trade stocks or not. If you want to do well in business, basically this first part, which is fundamental investors, I always say everybody, it's like you are illiterate in business if you do not know how to read a company's financials. So pretty much regardless of whether you decide to invest in the stocks or not, you should learn about how to interpret the fundamentals of a business. And this part, hopefully a lot of you guys already know how to read financials and then develop thesis about the company based on their financials. If you don't, this is a whole different beast that you have to learn. And you can start by Googling financial terms. Actually, the best way to do it is to look at financial statements of public companies. Look at Apple's. Just look at their financial statements and try understanding it if you don't know how to interpret them. And then just Google and learn, go through it. Maybe we shoot a video and add that later. But it is actually pretty easy to learn. So fundamental investors, you have to learn it. Even if you decide to do a different kind of investing thesis, I always look at fundamentals. A business is a business is a business. So it has to generate revenue. It has to have fundamentals, at least have some understanding of it. Okay. Now, the story-driven investing I also talked about. Now I want to talk about technical trading a little bit because I know a lot of people who do higher frequency trading, in let's say day traders. Some people trade for half an hour, like their average hold time is half an hour. Some people's hold time is a minute. Some people's hold time is microsecond. That's not a human, that's a machine. But a human writes the algorithm for it. Those are mostly technical traders. And let me say why. So imagine a company like Apple, right? A company like Apple, their fundamental, unless something catastrophic happens, like doesn't change throughout the day. Nothing about Apple changes throughout the day unless there's a big announcement or something. But the stock price goes up and down. So what is happening here? Basically what is happening is the market is the price is reacting to the forces of supply and demand for the stock. And that is what's driving it. A company can put out good news and the stock can go down, can put out bad news and the stock will go up. So there is something to be said about price action determining the trajectory of the stock price more than the fundamentals. That's what actually chartists believe. Chartists, in the very basic form, it is basically this is time and this is price. And again, this is the most basic form. So they look at, if you've seen these charts, bar charts, this is each one of them, let's say, is 1 day, and you have open, close, high, and low. So if this is 1 day of price point, it opened, let's say it's Apple, and it opened at 170, it closed, that's 170, it closed at 168, let's say, closed at 172, so higher, closed higher. So it opened in the morning, first thing in the morning, opened at 170, closed at 172, low was 169, and high was 174. And that's one data point. And then if you've seen these charts, they also put volume a lot of times. And again, I can make this very complicated, go into details. Actually, technical trading has been one of my favorite ways of trading, but I don't want to go too into it because we will lose the high level view of this world. And again, I would put references. There's a book that is considered the Bible of technical trading. We will put a link to it. They put volume. They say, okay, so this many tens of millions of shares exchange hand. This is the price action. You can then break it down throughout the day, see how it acted throughout the day, and that's just 1 day. This is a daily, they call it a daily price volume chart. So every day, different volume, different price action. You can break it down into what happened throughout the day, and then that's the price. And then based on this data point, up to, let's say this was today, a technical analyst or a chartist says, okay, I feel like Apple is a good buy right now. So they would, at this price point. So the next day they would put a trade in and they would buy it at a certain price, and then they have a rule to sell it. Now, again, this is a whole world by itself. Requires really, you can spend years just studying this. But the best way to think about it is there are things that chartists do, and I'm doing it mostly not to teach the exact technique because different people do it differently, but to give you a flavor of what to think of this. So one particular technical trading approach that is very popular is called trend following. So following averages. So you have price over time, and it's just jumping those charts that I showed you. These are bar charts. They're just, open, close, open, close, open, close. So that's what it looks like, right? So, and again, the shape doesn't matter, but the price looks like this. And this is they call it an average. So you run an average line. So you average, let's say, a 5-day running average on this. This is what you can do it like stockcharts.com is a good website to go. You put in the ticker, time, it gives you the charts. There are different ways of plotting this. I didn't exactly I didn't exactly dig into exactly these curves. There's like, candlesticks that look like this. You can go play with it. It's a lot of fun, actually. I really like doing this. That look like this, and they're like colorful green and red. This is called high-low open-close bars that shows the open price, close price, high price, low price, and then they show it in different graphics, but always the concepts are the same. It's price action over time. It's actually a lot simpler than what it looks. Those charts make you believe. Price action over time, and then volume plotted, and then tons of indicators. Combine these, and maybe sometimes other indicators are combined, and they kind of try to predict where the stock will go next depending on what has happened in the past. So that's the fundamental. Now, when you look at running average, then a trend following rule would be something like this. The running average has been up for 2 months. Therefore, the stock is in a clear uptrend. So it looks like that. And once it has been in an uptrend for 3 months, then you go in and you buy the stock and just ride the rest of the wave. It's basically waiting for the stock price volume action to prove itself, and then you go in to ride it for the rest of the way. Because again, a trend follower will tell you that an object in motion remains in motion unless something changes it, obviously. So that if it is in motion up, it will keep going up. If it's in motion down, it keeps going down. It's a matter of detecting when something, a stock is actually absolutely in an uptrend, in which case you can just go in and buy it. So that is one technique that is very popular, they call it trend following. In a previous video, I talked about stock market being like a beast, a monster, an emotionless monster. Think of it as a big elephant that doesn't even know you exist. You're so small compared to this elephant that the elephant doesn't know you exist. So the elephant is moving, and you detect the motion. You say, oh, the elephant is going in this direction at this speed. And you kind of walk with the elephant, right? In harmony with the elephant. And that's what trend following is really. So going with the market. There are people that bet against the market. So there are different ways of doing it. But I tell you another one that is you probably hear on CNBC all the time. It's called support and resistance. And again, the price goes up, down, up, down, up, down. A trend follower, a chartist would look at this. Let's say it looks like this. This is a very clear, this is a classical case of a channel. So they say, okay, so this is a bottom, this is a top, this is a bottom, this is a top, this is a bottom. I'm going to throw a line in here. I'm going to throw a line in here. These are tops. I'm going to connect them. So now I'm clearly in what they call an upward channel. And again, this is not to show you an exact technique because there's a lot to it, but to give you an idea of what this is, and then we can dig deeper later. It has bottomed out. It has bounced off of this line. It's just like what a typical chartist would say. It has bounced off of this line. This is called a support. This is called a resistance. So basically price has gone down, up, down, up, down. So it has, every time it has hit this line, it comes back down. It hits the line, comes back down, hits the line, comes back down. So it basically provides a support for the price. It hits it, goes back up, provides resistance. Now, no price chart looks so clear and so clean. It's always more erratic, but I'm giving you like the kind of thinking that goes into it. And they say, okay, so it has bounced off of this line 3 times, what they would say. Therefore, the support line is validated. Therefore, the expectation is that next time price hits here, it will go back up. So they wait until the price gets here. And some people wait for the first data point of bounce, meaning they wait for it to bounce, and then they buy right here. Some people wait for this line to actually break support, and they call it breaking support, and then they say, oh, it broke support, so they short it right here. So they wait. This is called a trigger. So basically the thinking is the price here doesn't matter, nobody cares about it when it is in the middle, but it's when it's close to a support, and that's why CNBC talks about it all the time, because it makes it very newsworthy. They're like, oh, the price is close to a resistance, it's close to support. So because they expect the price to all of a sudden either break it and go down or bounce and go up. So like all of a sudden this point is interesting, and they wait for the direction and then make a bet. So that's a technical trading. Now, I normally tell people that don't do just technical trading. I know it sounds perfect, that every information about the company is captured in price and volume action of the stock, but the truth is it's not. A company is made of people selling products. So let me say it again. A company is not a stock price. A company is made of people selling products. So you, without understanding it, you're already missing like 90% of the equation. So yes, in short term, during the day, these things might work. As a matter of fact, these things are perfect for day traders because fundamentals don't change throughout the day. But if you're a long-term investor, I always say look at these, use it to determine your entry and exit points, but fundamentals matter a lot too. So with that, I'm going to go back to the chart that I had earlier, which compared the three of these right here. So, okay, now let's compare these. I want to compare them against two things: time frame, and then I want to compare it. So time frame, what is the appropriate time frame for each one of these? Again, the answer is not perfect because different people have different views of this. Time frame, and then type of trader. So fundamental story driven trades are what most retail investors who are not sophisticated investors do, and also some really successful hedge funds. It's interesting. It's kind of like a dichotomy. So you know, if you ask your uncle what's your favorite stock, everybody will tell you something. Oh, I really believe in Apple because I really like my iPhone. Or like I said, the story I told you about Tesla. I believe in the future is electric cars, therefore I believe in Tesla. That's a story-driven trade. That is what unsophisticated investors actually do, as well as some really sophisticated investors. So it all comes down to whether the narrative is correct or not. So the narrative may be correct, in which case doesn't matter if you're sophisticated or not. If Tesla actually ends up being the largest car manufacturing companies and all the roads are all Tesla, of course it'll go up. So you have a narrative. The narrative, if you're an unsophisticated investor, is backed by nothing but just a guess. But it happens to come true. You're lucky. Great, fantastic. So basically, type of traders here is everybody. Everybody can do story-driven investments. They say, oh, I believe in, let's pick another one. I think IBM is a short because, you know, we don't have, IBM already have pivoted one time from being mostly a computer company to a consulting company. But you say, well, you know what, there's not much of a business there and they haven't been doing very well. I think so it's a short. Amazon is like, basically everybody buys everything on Amazon, and they just bought, at the time of shooting this video, I think 4 months ago, bought Whole Foods, something like that, a few months ago, bought Whole Foods. So they're going into big, massive sectors, therefore Amazon is a buy. That's the story, right? That's the story. That's a macro thing I can tell to my friends and just feel good about myself, and maybe I'm right, maybe I'm not, but everybody can do it, basically. Everybody with a little bit of ability to articulate things like that, trends like that, can do it. Time frame is long. So if you are rational and you are a story-driven investor, I shouldn't really use the term trader. let's say investor. Investor and trader are like really the same thing, but normally the term trader is used when the time frame of investment is shorter, and when it's longer, they call investor. So if you are a rational person and you're a story-driven investor, and you say that Tesla electric cars would take over the world and Tesla is at the top of it, and you buy Tesla today and you sell it tomorrow, just because, I would call you a hypocrite. Because obviously electric cars would not, like, from today to tomorrow, nothing would change about the percentage of electric cars that are on the road. It's very little movement. So you're talking, when you have a story, you have a long-term macro trend story, your investment has to go with your thesis. So your investment time frame should go with your thesis. So it's a very long time frame. Fundamental investors are different, but it is minimum a quarter. Why? Because financials are reported. Company financials are reported on a quarterly basis. So now this can be years, this can be a month. Some people, based on fundamentals, they buy the stock before the reporting, sell it like later, or right after the report and sell it later. But the time frame is like not a day. Most of the time, it's not a week, it's not a month. It's like a few months to a few years. So I want to say this is a medium range. So quarter to a few years. So that's a medium range time frame. Because fundamentals, like if you wake up in the morning at 9 a.m. and Apple hasn't had an announcement, and you buy Apple, by noon, nothing about Apple's fundamentals has changed. So it's not a short-term trade. Now, technical trades are the ones that have the longest, the widest range. They can be really short. Basically, anything that is in microseconds, seconds, minutes, hours, it's a technical trade, because normally companies don't have announcements. So this is short to medium. You can do technical trades for like trend following for months or weeks or days or quarters as well. But normally it's not like, oh, I'm going to buy this company because the price chart looks good and I'm going to hold it for decades. That's normally not what technical trading is for. So it's like short to medium is technical trading, fundamental investors are medium, and then story-driven investors are long-term. Now, type of trades, story-driven investors is basically everybody can do it. Very sophisticated people do it, unsophisticated people do it. It's just a matter of hitting the story right. Fundamental investors is medium to experts. So this is hopefully most of you guys with a little bit of a study are able to achieve this. Meaning you're able to look at a company's financial, not just the story. You can't just say Apple has to go up because iPhone, everybody has iPhone. That is just the story. That's just the narrative even. So you need to be able to look at the fundamentals of a business and make it, which is why I said medium to experts. There are people that, big hedge funds that just do this, and that might be something that you can get to. But even with medium sophistication, knowing the fundamentals a little bit would take you. Basically, the goal of this chart is this: if you are a beginner in stock, or you have bought stocks based on things like, oh, Tesla is going to take over the world and it's just a narrative, I want you to hold on to that. I'm not changing anything. I'm just adding things to you. I want you to then think about, okay, can I also learn to become a fundamental investor and use those skills to augment what I already do? So that's why I said medium to experts, because you can become an expert in this. There are, in fact, very successful investors who never look at charts. And they have billion-dollar hedge funds, massive funds, and they don't even believe in technical trading. So they just do this. Now, technical traders are basically experts. This is not something that you can just do, with little effort. Technical trading, the things that I showed you, requires constantly be on top of it. This is something you can do, basically everybody can do. This is something that with putting a little bit of research, you can start thinking like a fundamental investor. But then technical trading requires expertise, requires deep knowledge, requires a lot of work. So this is literally an expert work, and short to medium, like this can be minutes, hours. A lot of day trading is here. All of them are here. And this requires digging deeper, knowing your techniques, playing with techniques, backtesting data. There's a lot of things we can talk about, but I don't have time to talk about in this video, but we will add information for you guys to dig deeper yourself. Okay? With that, you get the big picture. Hopefully I was able to convey the 3 buckets of investment strategies to you. Within each one of them, there are thousands of, literally thousands, probably even more, different techniques in each one of them. Story-driven, unsophisticated, but I mean, a lot of people do it. I want you to definitely learn how to become a fundamental investor. If nothing else, it is good for your business acumen. And then finally, technical trading is something that I recommend people learn. But unless you're willing to pursue a career, I got into technical trading mostly as a challenge because it is stimulating, but it's a lot of work to actually remain a technical trader. Basically, this will become your job. So that's the next level. Okay, so. Homework based on what I just talked about. I talked about the 3 buckets, the 3 main buckets of investing in stocks. The way I have categorized it is technical analysis or technical trading. There's fundamental investing, and there's story-driven investing. So, and I talked about these 3 buckets in terms of the length of time, the time frame of investing, and also how much information, what is the level of expertise that is required. So I want you to do this. So the table that I had was time frame, skill or commitment, more like it, and then category was technical, and fundamental, and story-driven. I think that people use different terms for this. Story-driven, I think, illustrates the point. Now, I want you to do on a scale of, in order to find in which category suits your needs best, I want you to think about couple things. One, how much commitment are you going to put into this? This one needs a lot, so very skilled. This is less commitment, and this is medium. So first start from here. Say how much time commitment. Is this something that you're going to spend 5 to 10 hours a day on? Or this is something that you're going to spend 1 hour over the weekend on? So that automatically would tell you, okay, this is probably the most suitable for you. And then the next level would be fundamental, and then technical trading. So put a number here. Like, for example, say, okay, so I can probably do these 2. Some people are really committed. They want to do the whole thing. Then everything is a possibility. If you are very committed, that doesn't mean that you should go literally do this. You can also do this and that. But if you are not going to spend 10 hours a day on your skills, it automatically removes this particular category for you. So that's the first one. That's the skill level. And then there's also time frame. Are you going to be a day trader? In which case, you should definitely be a technical trader. Or if you're going to just buy stocks and just hold on to them for years, in which case all of these are suitable. So the next thing would be something like, okay, I'm a short-term trader, maybe weeks, maybe days, then maybe these 2 are the most suitable for you. And then once you have the categories right, then you know where you land. This will be your category. So the homework is determine how much commitment you have in terms of learning and developing the skills and the time you're going to put into it, and then also the time frame of investment. Are you going to be a short-term trader or a long-term trader? And based on that, find the right category in this chart that works best for you and write it in the comment section. That would unlock the next lesson for you.